You're watching Silver News Daily. Subscribe for more. Imagine waking up to a world where silver, often overshadowed by its golden counterpart, is suddenly the star of the show. Francis Hunt, a renowned market analyst, has dropped a bombshell prediction that has experts in shock. Silver could skyrocket to $2,500 per ounce. Yes, you heard that right, $2,500. In today's video, we'll delve into why this prediction has sent shockwaves through the financial world and what it could mean for your investments. Stay tuned as we explore the fascinating details behind this bold forecast.
And the ability to make payments then come under question. And what actually happens is, coincident to that, a major economic downturn takes place. So you may think you're good and you've got decent income and can even afford to pay double the interest rates, maybe even triple the interest rates in monkey money, giving it back and laughing all the way to the bank. But your clients won't be. Your business partners that you do business with won't be. The rug pulls on counterparty risks, the loss of assets, the potential bank devastations that could take funds out of people, the overall collateralized risk are going to make it very hard for one man to be an insular island of happy days in an environment where so much is burning. And unfortunately, if your entire neighborhood burns down but for your house, there's still a problem in the property market for you because there's no one left to buy your property and everybody else is scorched. And in that sense, we are all as strong as our society, and the society is going to get greatly undermined. And it's nice to be relatively wealthy compared to your friends, but if all your friends, peers are absolutely devastated, your ability to generate income and alpha will be greatly diminished because who you're selling to. And unless you have products that are already selling in the lower income areas such as China, India, and Asia, where I see there will still be some downward pressure, but unlikely to be of the scale that the West, that includes Europe, that includes the UK, the Commonwealth, Australia, New Zealand, Canada, and North America. And unless you have already got a very dominant position in an emerging market with an easily affordable product that shouldn't be displaced, or you're someone in the food farming and food provision where there's definitely going to be people that are going to need your product. I fear for most industries, a lot of these fluffy service industries, the derivative marketing, banking, legal services in City of London, a lot of those things that have become reliant on the financial engineering will start failing. That's going to run into the property markets in central London. It's going to run into the New York property market. It's going to the Hamptons, all these collateralized. There's going to be contagion. And the loss of wealth and the loss of income there is going to be thorough. So it's not a time, I think, to lose your mind and to be overly flaunting your good fortune and wealth. Put it in gold and silver. Maximize your income. Always focus on living well inside your means. The residual turn into your precious metals, certainly, and your miners. Get your share certificates as well, and then also, keep it tidy and maybe don't flaunt too much because there's going to be a lot of people that are going to be hurt. And work on your local community and self-reliance in terms of food and energy as well.
Let's dive into the current landscape of the silver market, which is crucial to understanding the potential for a dramatic price increase. Right now, silver prices are hovering around the $30 mark. This price point has been a battleground of sorts with multiple forces at play. One of the primary factors influencing silver is the strength of the US dollar. Recently, the dollar has been gaining momentum, thanks in part to the Federal Reserve's hawkish stance on interest rates. The Fed has indicated that it may keep rates higher for longer, dampening the prospects for a rate cut in the near future. This strong dollar generally puts pressure on silver prices, making it more expensive for buyers using other currencies. Adding to the complexity is the robust economic data coming out of the United States. Indicators like the S&P Global PMI reports have shown surprising strength, suggesting that the U.S. economy is on solid ground. For example, recent data indicated the fastest expansion in over 2 years, which bolsters the case for the Fed maintaining its current rate levels. This economic strength further supports the dollar, indirectly affecting silver by making it less attractive as an alternative investment. Despite these headwinds, silver has found support around the psychological level of $30.
Platinum as well, Elijah. I don't particularly like palladium right now and some of the others more exotics, but I do like platinum. So if we clip over to bring in the platinum chart, I want to highlight that platinum has suffered from an underloved syndrome that has been quite extensive. If we go through to the monthly chart, so we always start on the big time frames and bring it back down. Let's take a couple of interesting drawings off just so we can just see the purity of the price chart there. So in actual fact, platinum way back in 08, people forget it traded $2,300. And when I do, one thing I will do to make the case also for platinum is I'll do a gold relative to gold as well. So I do actually think platinum will outperform gold, and it's probably, with silver, my favorite too. Of the PMs now. That doesn't mean gold bad. Gold is going to do exceptionally well. It just, the whole complex will do really well, in my overall opinion. And I think platinum from here will start to outperform gold. This is how technically we carve this one up. It's literally, 08 was the peak. It's literally till 2020, which was, again, I keep defining 2020 as the big pivot event of hyper undervaluation and hyper overvaluation. And it's no shock that the debt market peak in valuation coincided with the stimulus and the March 2020 events. That was a major turning for the bond market. And as the debt and currency is now in its lockstep devaluation on an ongoing basis for an extended period, we're going to have stubbornly high rates, yet in spite of supposedly rates being bad, physical assets are going to go up immensely, particularly monetary commodities. I'm a little bit more cautious the energies of the commodity section. I'm bullish the softs as well and many other things. But just because the consumer is going to be a little bit crushed, the energies might lag a little bit. The monetized precious metals commodity side is absolutely a sweet spot, and platinum broke out of this falling wedge, but then it disappointed. It's entitled to a return move, but it broke out after the extremities of 2011. It came back and it's been zigging and zagging a little bit. We feel it's now getting on its bike and getting ready to go, and I'll show you that chart in a lower time frame for it to be better appreciated. And we feel 1,500, and this is also first set up in a new trend. So I will put a draw on here for you, and that'll highlight our targets that we are anticipating to come with platinum. And that is way up at 1,584. And as we say, our first setups in new trend.
A critical piece of the silver puzzle lies in the Federal Reserve's current stance on interest rates. The Fed's hawkish outlook has been a significant influence on the market, shaping investor expectations and strategies. Recently, the Federal Reserve has emphasized the need to maintain interest rates at their current elevated levels for a longer period. This approach is driven by their ongoing efforts to curb inflation, which they aim to bring down to the desired rate of 2%. The impact of this stance on silver prices cannot be overstated. Typically, higher interest rates boost the US dollar by making it more attractive to investors seeking better returns on dollar-denominated assets. This, in turn, exerts downward pressure on commodities like silver, which are priced in dollars. As the dollar strengthens, silver becomes more expensive for foreign investors, leading to reduced demand. Moreover, the probability of a rate cut in the near future has diminished significantly. Just a week ago, the likelihood of a September rate cut stood at 64%, but recent hawkish comments from Fed officials have slashed that probability to 53%. This shift has rattled the markets, contributing to a more uncertain outlook for silver. Interestingly, despite these challenges, silver has managed to hold its ground around the $30 level. This resilience is partly due to the market's anticipation of a potential shift in Fed policy. Investors are closely watching for any signs that the Fed might ease its stance, which could reignite demand for silver as a hedge against economic uncertainty and inflation. In essence, the Federal Reserve's policies are a double-edged sword for the silver market. On one hand, they have constrained silver's upward momentum by supporting a stronger dollar. On the other hand, any hint of a policy shift could serve as a powerful catalyst for a silver rally. As we continue, We'll explore how silver's bullish trends and key resistance levels could set the stage for the dramatic price increase predicted by Francis Hunt.
Affordability of living, the quality of life for people in the West. Overall, the average Joes, and I don't mean anything derogatory in that, man in the streets, people that are not maybe financially aware, that are not watching your podcast and wondering what they should be doing about preserving values. Unfortunately, for the average person in the West, my outlook is that the standard of living is going to collapse immensely. We're going to go back to reusing things, living in old clothes, darning clothes, who knows what might happen, but the quality of life is going to drop immensely. If you look at the total population and the average income and the amount of consumption that goes on, and you have China, India, and all these other nations, and then you look at the West, the number of people are far less, and the disposable income is much, much higher. And I unfortunately feel that there's going to be a great leveling. I'm sort of seeing this as a sort of communistic stamp on the bourgeoisie, and it's unfortunately going to mean higher taxes, very hard to get by potentially, high costs of living, cost of foodstuffs, and a lot of this consumption, this conspicuous consumption error that we've not even noticed anymore for being conspicuous consumption, changing your car every 3 years and upgrading the house and all of that, and living on debt and making, interest rate payments. I think that whole world is going to come to a grinding halt. And the people that will survive this well, who will preserve buying power, in spite of an ever-escalating underlying nominal number, are the people that have made strategic investments in physical things that are unencumbered by debt and monetary commodities such as the ones we've been discussing, which will outperform and will hold their own share certificates on metal miners, for example. Those people stand to do exceedingly well. There will be a lot more cheap labor and a lot more people closer to the breadline, I fear, in the post-Western world that we are likely to face in the unwinding of this massive contracting fiat and debt system.
Despite the challenges posed by a strong U.S. dollar and the Federal Reserve's hawkish stance, silver has shown remarkable bullish trends, which are crucial in understanding Francis Hunt's bold prediction. One of the most telling signs of this bullish momentum is silver's behavior around key resistance levels and Fibonacci retracements. Recently, silver experienced a sharp sell-off, finding temporary support near the psychological level of $30. This level is significant not only for its round number appeal, but also because it coincides with critical Fibonacci retracement levels. For instance, last week's swing low of $30.05 marked a 38.2% Fibonacci retracement, following a notable 24.9% rally to a trend high of $32.52. Such a strong bullish reaction after a relatively shallow retracement indicates underlying strength in the market. Silver's ability to break above recent highs, such as the $30.62 mark, and its swift rally towards $32.52, further highlight this bullish momentum. These levels are not just arbitrary numbers. They represent critical thresholds where buying interest has surged, overcoming selling pressures. The recent breach of these levels suggests that investors are optimistic about silver's future prospects, potentially setting the stage for further gains. Moreover, the technical outlook for silver points to formidable resistance around the top of the rising trend channel and several Fibonacci confluence zones. For example, the price zone from $32.13 to $32.36 has proven to be a significant resistance area. A decisive breakout above this zone could signal a continuation of the bullish trend, propelling silver towards higher targets. Looking ahead, silver's next major target is the 127.2% extended retracement level at $33.17. Beyond that, a cluster of Fibonacci targets between $33.78 and $34.06 presents the next significant resistance area. If silver manages to surpass these levels, the path could be clear for a continued upward trajectory, validating Francis Hunt's optimistic outlook. This bullish trend, supported by technical analysis and investor sentiment, suggests that silver is well positioned for potential gains. As we move forward, We'll delve into the long-term patterns and historical price movements that further support the case for a significant rise in silver prices.
So while I'm not in America, I'm talking American stats on the silver market for you. And you can see this truly is just getting going, Elijah, for us. You've got three localized highs. The biggest one for its time, for where the inflation index was back then, was, of course, the 80s. I've always maintained that the 2011 bull market was actually stopped in its tracks. It wasn't allowed to play fully out. So for me, this is a half bull. And then the most recent just trot up to the 2K for gold during 2021 post the events of the stimulus of March 2020, and silver's dipped to 11 and then run up to here. When you inflation adjust this is truly just getting beginning. There is so much. Just to get to the 80s level by multiple, there's quite a degree of overperformance. Just so that you know, this is literally 0.1, and up top here you're at about 6 as a number. So don't think of the meaningfulness of the individual number so much, but just look at the multiple you would have to do to get there, inside of the fact that the CPI will continue to do devaluation and will keep coming. So whatever that CPI rate is, silver, the high of the 80s is 0.61, and you're barely at 0.1. So that's another 6x of the inflation rate that you're going to. So it's going to have to beat the inflation rate by 6 times to get to an equivalent level of the 80s. And I expect that it's going to outperform the 80s high. So for me, this is the long-awaited real mega bull, for which, in fact, the original 2011 may just have been the first leg of a 5-leg move. And what's typical in Elliott wave is wave 3 is by far your largest as well. So there's a lot of reasons to be very optimistic as a silver person, and to not believe that you are too late. My assessment is everyone should participate in this, and buying at $30 is seminally, on an inflation-adjusted basis, still very cheap. And this is going to start to be very interesting for the miners in due course once we continue to maintain these price levels for an extended period.
To fully grasp the potential for silver to reach the extraordinary price of $2,500 per ounce, it's essential to look at the long-term patterns and historical price movements that underlie this market. One of the most compelling aspects of silver's current situation is its long-term bullish setup, often referred to as a bull flag pattern. The bull flag pattern in silver is characterized by a steep upward movement, followed by a period of consolidation within a downward sloping channel. This pattern typically signals that the market is merely taking a breather before continuing its upward trajectory. For silver, this pattern began to form following a significant rally from the March 2020 lows during the initial pandemic sell-off. The price of silver surged by 156.5%, climbing 18.22 points from its lows. This dramatic rise was followed by a period of consolidation, creating the downward sloping channel that defines the bull flag. The completion of this pattern suggests a strong potential for continued upward movement. The target derived from measuring this bull flag pattern on a dollar basis points to a price of approximately $41.70, which is around 37% higher than the recent closing price of $30.36. These long-term bullish patterns are not just theoretical. Historical price movements provide additional support for this outlook. For instance, silver's behavior during previous economic cycles has often mirrored the current setup. During times of economic uncertainty and inflationary pressures, silver has historically performed well as a hedge and store of value. Moreover, that historical context shows that silver has experienced substantial price increases following similar setups. The key here is the sustainability of the breakout above the critical resistance levels we discussed earlier. If silver can maintain its momentum and break through the $34.06 level decisively, it would likely attract significant investor interest, driving prices even higher. This long-term bullish outlook is reinforced by ongoing economic conditions, such as persistent inflationary pressures and geopolitical uncertainties. These factors contribute to a favorable environment for silver, as investors seek safe haven assets to protect their wealth. As we continue our exploration, we'll delve into how current geopolitical tensions and strong economic data are influencing silver prices, further building the case for Francis Hunt's remarkable $2,500 prediction.
But where possible, have not just a US bug out spot, which might be, in the middle states, in rural areas, etc. But if you can start having some optionality outside of the US system, the US legal system. What would you do if they brought back conscription and it's crazy wars they want to pursue, and it's part and parcel of the controlled demolition of the economy? You might value having a residency outside. In some of the nation states, unfortunately, that will do better than the West. Many people will say, "I'm here to fight," and it provokes the buccaneer spirit. Sometimes some fights aren't worth having. And it's not popular for me to say that. And I can easily say this now because I was forced to leave my home for a number of reasons. And I realized the world is your oyster. And when you go as a tourist or someone, people treat you better than your home state. They want to attract your capital. They want to attract your investment. And because you are almost not a slave of their plantation, they have to seduce you, because there are other nation states that will also be very happy to have a high net worth individual, if you are that, who has precious metals and is ready to invest and do positive things. And the minute you're in that position, the fiscal things change. It's very hard to leave your own home, but I would say to people, develop optionality outside of the grand Western axis. There is nothing but folly, and unfortunately, the people at the very, very top are hell-bent on its destruction, as far as I'm concerned, and it is intent, not incompetence. It is intent. So you're essentially in a beautiful plane, but with a crazy pilot who's going to fly it in the mountain. And the fact that you right now have one of the most comfortable seats and you're in business class and you're being served the prawn sandwich doesn't mean that smashing the mountain isn't going to hurt and end badly for you despite that. And you might want to be in some people will think a Tatia plane, an older 737, but it's going to touch down and land and get you to a destination where you won't have those parasitic forces that seem hell-bent on destroying the finances of the U.S.
Geopolitical factors have always played a significant role in the movements of commodity prices, and silver is no exception. Recent geopolitical tensions, particularly in the Middle East, have contributed to silver's price volatility and its potential for significant gains. One of the most impactful events has been the escalating conflict between Israel and Hamas. The increased hostilities, including Israeli airstrikes in Rafah and subsequent rocket attacks claimed by Hamas, have created a risk-off sentiment in the financial markets. Investors typically flock to safe haven assets like silver during times of geopolitical unrest, seeking stability amid the uncertainty. The recent spike in silver prices to $30.80, peaking at $30.92, can be largely attributed to these tensions. Such geopolitical instability often leads to a flight to safety, with precious metals like silver benefiting from increased demand. This rise is particularly notable given the backdrop of strong U.S. economic data and hawkish Federal Reserve comments, which typically would exert downward pressure on silver prices. The ongoing conflict has broader implications for market stability, influencing investor behavior across various asset classes. As the situation evolves, the potential for further escalation remains high, which could continue to drive demand for safe haven assets like silver. Moreover, these geopolitical factors intersect with economic policies, creating a complex environment that can amplify price movements. For instance, strong U.S. economic data and the Fed's stance on interest rates have already limited silver's gains by strengthening the dollar. However, the geopolitical risk premium added to silver prices during periods of conflict can counterbalance these economic pressures, leading to increased volatility and potential upside. In addition to the Middle East tensions, other global hotspots contribute to the geopolitical landscape. Trade tensions, regional conflicts, and political instability in various parts of the world create a persistent state of uncertainty. This uncertainty further underscores the role of silver as a safe haven investment. Looking forward, the interplay between geopolitical tensions and economic data will be crucial in shaping silver's price trajectory. If geopolitical risks escalate, the demand for silver could surge, supporting higher prices despite a strong dollar and hawkish Fed policies. As we continue our analysis, we'll delve into how economic indicators and the Fed's monetary policy are shaping the silver market, providing a comprehensive view of the factors that could drive silver towards Francis Hunt's ambitious $2,500 target.
No, silver is doing exactly what it should do. It's accelerating. Please build your positions if you haven't already. Keep an eye on platinum. And in fact, you're seeing an overall general commodity boom. Even the stock market will go up because of that inflation part of the stagflation. So generally things are going to go up, and it's going to surprise you how much by price, right the way from most commodities. We have energies as last in the line, but even still in due course, those things will move. So watch that, and the stocks will go up, but hold your own certificates. Buying power of cash and fiat is contracting at an escalating rate. Do not be caught with too much money in the banks. That's our big thing. Stay out of the debt markets. You have probably too much of it in your pensions. Try get out of those assets. It's in terms.
The silver market is not only influenced by geopolitical tensions, but also by a complex array of economic indicators and monetary policies. Recent robust economic data from the United States has played a significant role in shaping investor expectations and strategies, particularly regarding the Federal Reserve's actions. Key economic indicators have shown surprising strength, contributing to a bullish outlook for the U.S. economy. For example, the U.S. durable goods orders data revealed a 0.7% increase in April, contrary to the expected decline of 0.8%. This unexpected growth indicates that businesses are investing in equipment and long-term assets, reflecting confidence in the economic outlook. Furthermore, the University of Michigan's Consumer Sentiment Index rose to 69.1 in May, surpassing forecasts. This index measures consumer confidence, which is a critical driver of economic activity. Higher consumer sentiment suggests that households are more willing to spend, which can stimulate economic growth. Additionally, one-year inflation expectations edged up to 3.3%, while five-year expectations dipped slightly to 3%. These inflation expectations are crucial as they influence the Fed's monetary policy decisions. The Federal Reserve's recent comments have emphasized the need to maintain higher interest rates for an extended period to control inflation. This hawkish stance has strengthened the U.S. dollar, making silver and other commodities less attractive by comparison. However, the interplay between economic data and Fed policies creates a dynamic environment for silver prices. On one hand, strong economic data supports a robust dollar, exerting downward pressure on silver. On the other hand, persistent inflation concerns and the potential for geopolitical disruptions can drive demand for silver as a hedge against uncertainty. This duality is central to the current market scenario, where silver finds support despite facing significant headwinds. Looking ahead, the release of key economic data, such as GDP figures and further Fed communications, will continue to influence market sentiment. Positive economic reports may bolster the dollar, but any signs of economic slowdown or increased inflationary pressures could shift investor focus back to safe haven assets like silver. Moreover, the upcoming U.S. bank closures for Memorial Day and significant Fed speeches are expected to provide further insights into the economic outlook and monetary policy. Investors will be closely monitoring these developments to gauge the future direction of silver prices. As we move forward, we'll explore how the gold-silver ratio and industrial demand are influencing the silver market, adding more layers to our understanding of the potential for silver to reach Francis Hunt's ambitious $2,500 target.
This is on a very big time frame. I'm going to throw out some of the big numbers that should make many people hopefully smile. So it should be full of good news today, Elijah, in terms of silver. With that triggering event on the gold-silver ratio, if we look at the multi-year, the multi-decade that goes right the way back to the 79-81 bull market, this, and many people, traditional technical analysts, will be saying, there's your big cup and handle. I've heard many refer to it over here. Many people talking about the sort of rim or the lip, if you like, being at that 45 through to 50 level that everyone's waiting to be broken. But for us, you've already triggered your third relative high over here. So this is actually a triggering event. We like to be early. We don't want to be chasing in when everyone else is chasing in. And technically, this is very, very bullish. That's, I would call, our first and original high. That's our truncated one. That was the 2011 bull market that was part allowed to run. And this is our gold made 2021, and silver fell to 11, but then made the Wall Street bets high of just through the $30 mark. So these are those three highs, and we see this as a triggering event of that localized high. And we talked to you about 3 highs and then the 4th being relevant. Hence why we say once, twice, 3 times, and then a lady. And so this is a very significant candle for HVF method people who want to be in early. And this is a triggering event for us right now. And it's at 31.53 at the moment. It certainly seems to be building a very strong foundation. So your question was, is the 30 support now? So let's just clean our face and revert back on the lower time frames. There was the break of the capping descending grind line. That happened a while back. And now we've had the gold-silver ratio break. And now we've taken out that Wall Street bets high that was 2021. And it does seem to have had just one red candle. We're only in the first day of the new week, Elijah, and that's a pretty strong rebuttal. If I take you into the daily chart and just have a look at that, we've returned, moved, we've kissed the previous high. So what tends to happen technically is a legacy previous high is broken with momentum, then turns into support, gets the return move visit, which has occurred, and is now showing quite a bit of stamina to revert back to the upside. And in fact, a lot of the vigor in the precious metals market is now in platinum and silver, and gold is a little bit more docile and a little bit more chilled, which is an important part of the second stage, the other precious metals starting to outperform. So silver looking really, really good, and I'm excited. And I think that the 30 round number dollar mark is now a localized support zone.
A crucial indicator for the silver market is the gold-silver ratio, which measures the relative value of silver to gold. This ratio has historically been a significant predictor of market trends and investor sentiment. Recently, there have been notable movements in this ratio that suggest a bullish outlook for silver. The gold-silver ratio has been on a downward trend, which is an important signal. A declining ratio indicates that silver is gaining value relative to gold, often a precursor to a bull market in silver. Currently, the ratio stands at around 75, down from its recent highs. This drop is significant because it highlights silver's outperformance compared to gold. The gold-silver ratio's behavior can provide critical insights into market dynamics. When the ratio declines, it often means that silver prices are rising faster than gold prices. This trend can be driven by various factors, including increased industrial demand for silver, geopolitical tensions, and changes in investor sentiment. Silver's industrial demand is a key component of its price dynamics. Unlike gold, which is primarily a monetary and investment asset, silver has extensive industrial applications. It is used in electronics, solar panels, medical devices, and numerous other technologies. As technological advancements continue and the demand for green energy solutions grows, the industrial demand for silver is expected to rise. Recent data shows that half of all silver is used in heavy industry and high technology. This broad range of applications makes silver more sensitive to changes in industrial demand compared to gold. For instance, the ongoing global push for renewable energy sources has significantly boosted the demand for silver and solar panel production. Moreover, supply constraints are adding upward pressure on silver prices. Reports indicate that silver stockpiles on the London Bullion Market Association are at their second lowest level on record. Similarly, trading volumes on the New York and Shanghai exchanges are at seasonal lows. This tight supply, coupled with rising demand, creates a favorable environment for silver prices to increase. The interplay between the gold-silver ratio and industrial demand underscores the potential for significant price movements in silver. As the ratio continues to decline, it signals a growing preference for silver among investors, which could drive prices higher. In the next segments, we'll explore the perspectives of various experts on Francis Hunt's $2,500 prediction and delve into how this forecast aligns with historical trends and market fundamentals. By examining these expert opinions, we'll build a comprehensive view of the factors that could propel silver to new heights.
100%, Elijah. In fact, it's one of the key triggering events we gave you that we're looking for to see fall. We're looking for the gold-silver ratio to surrender this dotted basing ascending grind line, and we've been talking about it many times, and it retained or managed to sustain itself continually in this grinding up channel. And we said two things: it should give up to the downside. And when it gives up to the downside, it should fall in a fairly disorderly, quick manner. And apart from the 75 level, which we drawn in faint blue over there, the next major level is 65. And it's kind of interesting because that's exactly what it's done. From last week and the week before, I believe it was, let's just draw that again and drop the time frame to the daily. You can see that we were actually at 88 at our midpoint of our channel over here. So if I circle it for you, that's roughly the midpoint of the channel. And you can see we tapped out there. That's 88. And next thing you knew, we traded through the 75 on the gold-silver ratio, a really abrupt, disorderly break, which is just how breaks should occur. And the rally was only able to do a rising wedge up to our midpoint before rolling over to die. And more importantly today, because we're talking right here and now, is that despite only making it back up to the 78.2, today's price behavior of silver versus gold is seeing us make a new low. So we're now trading down through the 75, Elijah. It looks like we're ready to let go of that one other key number, 75. And as I explained on the bigger time frames, the next level that becomes of interest to us, and often you cover the open territory in quite a disorderly fashion. We've already seen how steeply it's gone down from the 88 down to here. You've had a weak rally. Now, it doesn't have to do it as quickly, but there's a possibility it could. You could find yourself down running a number less than 65 before we get some form of a rally up. And that's exciting because I could see silver potentially then being through the 30s and possibly in that 40-45 range, which is that key gateway to the long-term 50 resistance on silver to the dollar.
To gain a more comprehensive understanding of Francis Hunt's ambitious $2,500 silver prediction, it's essential to consider the perspectives of various market experts. Opinions on such a dramatic price increase are mixed, but several key points of analysis help frame the discussion. Many experts agree that the fundamental drivers of silver's price include both industrial demand and its role as a safe haven asset. On the industrial side, analysts like those from the World Silver Survey highlight that half of all silver is utilized in heavy industry and high technology. This extensive use case supports a bullish outlook, especially as global economies invest more in renewable energy and advanced technologies that rely on silver. Economists like Chris Williamson from S&P Global Market Intelligence have noted the surprising resilience and growth in the U.S. economy, which traditionally puts pressure on silver due to a stronger dollar. However, they also acknowledge that economic growth can lead to increased industrial activity, thereby boosting silver demand. On the investment side, prominent market analysts, such as those at Liberty and Finance, emphasize silver's potential as a hedge against economic and geopolitical uncertainty. They argue that with ongoing geopolitical tensions and persistent inflationary pressures, investors will increasingly turn to silver to protect their wealth. This sentiment is echoed by other experts who see silver's dual role as both a commodity and a monetary asset as uniquely advantageous in volatile markets. Contrarily, some analysts caution against overly optimistic forecasts, citing potential headwinds like the Federal Reserve's commitment to maintaining high interest rates and the resultant strength of the U.S. dollar. They argue that these factors could cap silver's upside potential in the short term. However, they also concede that any shift in Fed policy or a weakening dollar could swiftly change the market dynamics in silver's favor. Looking at historical trends, there have been periods where silver experienced significant price spikes. For example, during the economic uncertainties of the 1970s and early 1980s, silver prices soared dramatically. More recently, the 2011 silver rally saw prices briefly approach $50 per ounce. These historical precedents suggest that while a $2,500 target is unprecedented, the silver market has demonstrated the capacity for substantial price movements under the right conditions. The consensus among bullish experts is that several key factors must align for silver to reach $2,500. These include sustained industrial demand, geopolitical stability, shifts in monetary policy, and a favorable economic environment. They argue that while the target is ambitious, it is not entirely out of reach if these conditions are met. As we continue, we'll delve into how these factors could converge to create the perfect storm for silver prices. We'll examine the potential triggers and scenarios that could lead to such a dramatic rise, building a compelling case for Francis Hunt's bold prediction.
To consider, I prefer the Southern Hemisphere. You can look at Latin America for those in Australia, Bali, Indonesia. Eastern Europe is a bit hot with the Russian-Ukraine thing. outside of that, they've sort of seen this movie before. They're more pragmatic to the communistic overtures, and it's actually, if it wasn't for the Russian-Ukraine thing, it would probably be top of the list. You've got Hungarian Prime Minister that's kind of resisting a lot of the immigration is everything. You've had Slovakia, unfortunately recently shot, not overly keen on the escalation and passing arms to Ukraine. So if things settle down on the Russia-Ukraine thing, I don't think they are going to. I think that war is going to be kept warm. Generally, they're not a bad place. But while that's going on, I'm tempted by the southern hemisphere, I have to say. And it's kind of remote. And there's a lot of good places. But, nothing feels like home. But you can always visit. And once I left my home and I visited and I became, call it as someone who had an international footprint, I've been better looked after, and actually my wealth building has gone better. You're not feeding this corporate fascist that there isn't a single war or conflict it doesn't like the look of and want to participate in. And I take pride in not funding that. It's hard as a taxpayer in the States to not think some of your dollars are going into quite nefarious